You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. Welcome. Today is June 17th, 2020. It is a beautiful day and also an action-packed one as it relates to Toronto real estate. There is a ton of information, and we're getting back into one of these seasons where as we kind of hit that mid-month time frame that I can't keep up. Sometimes it gets very easy, right? Like you can keep track on a daily basis, but times like these are very difficult. And so there's a lot here we're going to cover, but it's also extremely important. It's also very difficult to order what comes first because it's all so important. So we're going to have a lot of fun today. Thank you for joining us. We are #1 on iTunes, on Spotify, and on Google Podcasts for Toronto real estate. And it's all thanks to you guys. And all we're doing here is researching. We're learning about the news. We're staying up to date. Myself, my investors, and all of our friends that we're meeting along the way. And what's kind of happened in the last couple of months is we've built a little bit of notoriety to the point now where we're actually a source of information for a lot of heavy investors. And so we're able to pool in some pretty big names. I was just speaking yesterday with the assistant of our next guest. I'm going to be interviewing on Friday, which is going to drop in our video next week. His name is Patrick Francie. He is the CEO of the Real Estate Investment Network. And we're going to have him on. We're going to learn about the market. We're going to learn about everything that they're suggesting to their membership. They are a huge organization, and we are thrilled to have them come on our show as a guest. It's going to be amazing, guys. We're getting plenty of guest requests. And if you know someone who would add value to our channel and to assist our investors here in the GTA, send us a message. And also today on YouTube, we're going to be dropping a video. It's going to be discussing me convincing you whether there's going to be a crash and then convincing you there's going to be resiliency in our market and leaving it up to you to decide. That will also hit our airwaves on any platform you get your podcast tomorrow morning. So we have so much good stuff happening. And that's just the lead in, guys. Here we go. You want to know what we're talking about today? First, we're going to talk about how Toronto real estate is shaping up for June 2020. We already have indications on what this month will look like. So we're going to talk about that, and we're going to talk about some of the expectations because we're hearing some negative news as it relates to RBC. And they're looking at the same information and coming to different conclusions than what some of the people out there getting themselves in bidding wars are. And we're going to talk about that. And then, are permanent residents slowing down more than expected? Well, the answer to that is yes. And I want to share with you because these numbers come as even a surprise to me. And with all this talk about immigration, how important it is, we need to know what the numbers are saying, not what the expectation is, because they don't line up. And what changes can we expect from interest rates and consumer spending in Canada? You see, I'll group those together again because there's just so much in there. And we're going to talk a little bit about what interest rates are going to look like and what is happening with consumer spending. Okay? Sound fair? All right, let's do it. Now, before we get started, fun fact. I love to look for the lighter side of news, and I find this hilarious. And it's related to real estate, so it's great. So I saw something this morning that the first baseman and the coach of the Blue Jays owe thousands in rent since this inability to evict tenants. Now, their rent obviously is a bit higher than your local person, but they're not paying rent. They're taking advantage of the system. Are they? Or is the system taking advantage of landlords? Anyways, let's get into it, guys. Fun stuff. And in yesterday's podcast, you'll recall, we talked about the CREA stats, the Canadian Real Estate Association stats. We talked about home sales. We talked about prices and how they're heating up again across the country, let alone across in Toronto. But how are we looking halfway through June? Well, we're starting to see a little bit of information on that. Toronto Stories put an article, it's called this: First 2 weeks of June see more home sales than entire month of April. Okay, so not entire month of May, entire month of April. But still, we have doubled April already. In another sign, here's the article. In another sign that the real estate market is continuing to heat up, it didn't take long for Toronto home sales in June to surpass April's record low levels. Of course, bragging about having a better month than April 2020, the worst April in the 25 years of TREB sales records, is dangerous territory. but doing so in fewer than 14 days seems like a good sign of things to come for the month and a city that finds themselves still stuck in stage 1 of an economic recovery, attempting to rebound from the worst financial crisis since the Great Depression. In other words, small victories are welcome. And I couldn't say it any better than Niall McDonough. I know I butchered that name, but this is one of our viewers on YouTube. And this comment was made a few days back. And I laughed my head off because we were being very optimistic about the market and the news that came out at that time. And this is what this individual said. I'll take good news. Any good news these days. Feel free to even make stuff up. No problem. Well, fortunately, we don't need to make stuff up, and the news is getting good all by itself. So I'm optimistic about our market, but not everybody is, but that's okay. You're able to make your investments however you choose. So this article goes on. It shares a tweet from Scott Ingram. He's a CPA and a CA. He's actually a realtor and a chartered accountant, and he analyzes a lot of data, and he said that the first 13 days of June already surpassed all of April's MLS sales transaction totals, 9% more on freeholds and 14% more in condos. I've got freeholds as 79% of May volumes already and condos at 71%. Both will still end up lower than 2019 volumes, but gaining ground each month. This was the post that everything is kind of based on. So counter to what some people will say, as we read in a Better Dwelling article yesterday, that their spin was, well, you would expect it to be higher than last year. That is a substantial jump. Right? Like we're trying to rebuild here. Like once the house of cards fall down, you got to rebuild them one layer at a time. You can't just say, "Oh, well, you know, there was 4 stacks last week and here you are sitting at 2 stacks, so you suck." But we're rebuilding. We're on the right trajectory. Sales continue to climb from the basement it found itself in during April, which was when sales were down 67%. May already did its part, showing signs of a rebound. And now June looks like it's intent on keeping the market's rising return to pre-COVID times alive. This is the dream. This is the dream. Get back to that mid-March, right? Or wrong. We're going to see the wrong side in a moment. With sales traditionally slowing down through July and August, Toronto real estate possibly enjoying a, quote, delayed spring this year. So here's the combo. The summer 2020 could see the markets return to historical precedents, albeit due to having had its worst spring on record. So here's some food for thought. So April and May are uphill fights, right? Because they're the peak of the market every year. They're the most expensive months, specifically May. And so to get any number remotely close would be a miracle, right? But June, prices tend to kind of come back down a little bit. Like your spring is over. We're now in the summer, and until we see, September, and then there's a little bit more of a peak there. Prices, there's a bit of a valley, right? So it is so important that we get good numbers this month. That's my conclusion, okay? If our numbers come in even close to what they were last month or a little bit lower, I would be nervous. I don't think that's the case. I'm seeing optimism here, but keep track. This is an important month for that reason. But what's also happening that they're alluding to in this article is that our spring was missed, and therefore there is pent-up sellers and there's pent-up buyers that when they see that things are getting a little bit more rosy, they're going to come back onto the scene, which will put our spring market into the summer, which should also help boost those numbers. Again, a reason why June should be a good month. And if it's not, watch out, duck. Or should I say Blue Jay? Meanwhile, bidding wars, bully offers, and buyer and seller confidence have already returned to the market. Guys, the market is hella competitive right now in certain sectors. Those who have patiently waited the last few months before selling are being handsomely rewarded. Thank you for listening. As we've been telling you, just hold on. Now, the call is up to you because everything seems to be lining up with the second half now of 2020. Now, we've kind of bought ourselves a little bit of time with the new CERB announcement, but with mortgage deferrals, this is where rubber hits the road again, right? I mean, rubber already hit the road, but this is where rubber hits the road again, and this is where people are going to once again divide on where they think will happen. I believe you can have said that the last few months were going to be good, but then also the same person can believe that the next few months will be bad. I believe that. I don't think you have to decide what was good and what was bad. And I think that is very likely what could happen too. Like there's good arguments for that. So don't judge people on what they're thinking or what they're finding. And we're seeing big voices on both sides of the aisle. In fact, Toronto Stories as well, they published an article speaking about RBC. RBC now forecasting benchmark home prices to fall 7% by middle of 2021. Benchmark prices is key because that means it's by housing type. So that is a real drop in prices by middle of 2021. This is the article. In the latest housing market update, RBC is forecasting national benchmark home prices to fall 7% by the middle of 2021. Noting so they are aware of May's impressive percentage growth, and they've seen this rebound, and how they're saying May saw is overinflated when given proper context. Namely, April was the worst month. So they're looking at the same news we did, and they're taking the more pessimistic side of that. It's like, you know what? Yes, it did good month over month, but how could you not? April sucked. Right? But in the same token, compared to 2019, we're way down, guys. They say, if you ask them, that we went from sub-basement and now we're just in the basement. Like we're not even here yet. According to RBC, the eye-catching month-to-month gains across the country overstate the rebound. Activity was still 40% to more than 50% below year-ago levels in most major markets. The increase in May made up only 1/5 of the drop in March and April in Vancouver and Toronto, and closer to 1/4 in Ottawa. So you can see they're saying, well, you haven't rebounded all the way, and so you're still sitting rock bottom here, and we've got ourselves a problem. The bank also believes that some of the factors are rising supply, which we'll get to in a second, COVID's full economic shock on potential home buyers, and home pricing cresting. These are their kind of factors. We expect the increase in supply to tip the scale in favor of buyers in many markets across Canada, some sooner than others. So to say we will come through a heated market, which we've just seen, but also to see a poor 2021, the next year, that is what they're saying. So that is a legitimate stance as well. You don't have to be all in on either side. To be uncertain and to move and shift the cards a little bit is fair. In fact, even in 2008, we saw huge rebounds and then a quick drop. They call it kind of a second crash, as we saw, and then it continued on its way. So do you day trade real estate or do you not day trade real estate? I don't day trade real estate, but if you were to day trade real estate, you could take this month by month. That said, the main reason home prices in Toronto aren't dropping is that up until this point, supply and demand have fallen in tandem. This is key. It cannot be overstated. The fact that these are so in line with one another is nutso. So much so, in fact, that Toronto real estate remains a seller's market. RBC's report notes that it, quote, could take a little longer in Ontario to see market favor tip towards buyers, but they do suspect it will happen. So are buyers or sellers going to come on first? They're saying buyers are going to come on first. Or actually, they're saying sellers are going to come on first, right? And they're going to put the pressure on the seller and change the cards, as it were. But as it is right now, we sit in seller's territory. So, guys, forecasts, hands in the air. Throw your hands in the air. Throw the papers. Your guess is as good as mine. This is why we need to be on this every single day. Okay, so I saw a really interesting article came out of Financial Post, which adds incredible value to what we just talked about, okay? It was an opinion piece called Rising Home Listings Could Point to a Troubling Trend. Some may be compelled to sell their property. Okay, I find this very fascinating. Listen to this. This is talking about the CREA report that we spoke about yesterday. The report also revealed, let's backtrack. Monday showed home sales across the country rose 56%. Okay, in May compared to April. But the report also revealed a 69% increase in listings in May compared to April. While actual new supply, this is based on not seasonally adjusted, was still 38.1% below May. Analysts believe it signals a diversion between supply and demand. I'm not smart enough to see what's going on here, but based on what this guy is saying, and we're going to have to track these numbers maybe, but this is the first time I'm hearing of this diversion of supply and demand. We need to be on this, because if we do in fact see a rise in supply relative to demand, we got a problem. And they're saying, according to CREA, we do see that. So pay attention to that. These are early signs that demand and supply are decoupling. That's RBC. So there you go. Now you see why RBC might be standing on that position. We expect further decoupling in the period ahead. Economic hardship is no doubt taking a toll on the number of current homeowners, including you guys, investors. All right, I think we beat that with a baseball bat. Dad jokes. Dad jokes for days. Okay. A new survey by Remax. Where are we here? This is the same article. Okay, I have to point this out because I've got it highlighted. I want to make sure we don't miss any big stuff. A new survey from Remax, so the other side, noted that 56% of Canadians polled are planning to engage in real estate in less than a year, and around 44% believe the real estate market will bounce back to the strength it was pre-COVID before 2021. Actually, that sounds like more people don't. Right? Like the majority of people don't think we're going to see the prices in March, because if 44 believe it'll bounce back, that means that I don't know if the rest believe it will or won't. But anyways, I think they shot themselves in the foot on that one. All right, let's get off this topic. Hopefully you guys know what's going on in June. The numbers are very good, but the prospect of what could come are still in many ways negative by some of the bigger headliners. Okay, next topic, permanent residence. We talked about immigration. We talked about the importance of immigration. I think we've beaten that one like crazy. Regardless of what you think, immigration appears to have an incredible impact on our economy. We've seen a lot of optimism about immigration over the last year. We were number one in I can't say North America because no, it's in Mexico. Are we number one in Mexico? I don't know. But in Canada and the States, right? And we estimate a 35% drop this year. That was the guess on immigration coming down. But now, these are the first time I'm actually seeing numbers, and they are a little more than 35%, okay? Canada's immigration has slowed down due to the pandemic, at least for a few months. The Immigration, Refugee, and Citizenship Canada, IRCC data, shows a steep decline in the number of new permanent residents in April. The drop is one of the sharpest in recent history, with large real estate markets most impacted. The pandemic didn't quite halt new permanent residents, but it came pretty close over the past few months. So here's what they're saying. So Canada saw 4,140 permanent residents in April, which was down from 78% a month before. So from March to April, it dropped almost 80%. This is an 85% decrease from the same month last year. The drop over the past few months has put Canada significantly behind its target. So maybe the impact on immigration due to COVID is way more than was even guessed. Like that is 50% more, because we were guessing a 35. My understanding was a 35%. That's all I saw up until this point. Now we're saying 85%. That is huge. And when we're saying 85, we're talking month over month. But the other thing to keep in mind is the numbers, they kind of drop. So they go and talk about how in Canada, when we look at the quarter for the first 4 months was down 20% from last year. But when we look at what we just saw, right, that April was 85% year over year. So everything happened at the last part of the first quarter. And so my expectation is if we're seeing quarter drops of 20%, but 85% drops in April, I would assume that May and maybe June, but definitely May, would look far more like April than they would from January to mid-March. That's my expectation. You guys make up your own thoughts on this, but I don't think you're going to see a travel increasing like crazy between April and May. I mean, I didn't see that. So we do rely heavily on immigration. And so this drop will have high impact on our market. We need to reopen quick, and we got to get back on our feet. This is my point here. Immigration is super important. The trend that I'm noticing is immigration is coming to Toronto proper, and then the local residents of Toronto are moving outwards into the suburbs. That seems to be the trend. And so if we want to fuel that movement, as we've seen in record numbers last year, then we got to get these numbers back up. And of course, we're still allowing citizenship. We're still open. Our doors are open, which is more than most places can say. But time will tell. Keep that as a factor, guys. Keep that as a factor when you're trying to determine what will happen with real estate prices. Okay. Can we do one more big topic here? We're going to talk about interest rates, and we're going to talk about consumer spending. All right, here we go. We're going to start off on the consumer spending side. Okay, so consumer debt loads dropped. This is a Bloomberg article. For the first time in a decade in Canada. Interesting. A sharp decline in the use of credit cards at the end of March led to the first drop in consumer debt balances in more than a decade, according to Equifax. They are the largest credit reporting firm, if you've never heard of Equifax. And if you have never heard of Equifax and you listen to our podcast, that doesn't make sense. There's a disconnect there. I like to think that we're all on that same page. So average balances on debt, excluding mortgages, dropped 0.5%. for the first quarter from a year earlier. So with stores and restaurants closed in March due to coronavirus, consumers cut back on credit card use, leading to a decline in balances. The trend gained momentum in April, so it got even more, with few signs that consumers are looking to debt for support in the early days of the pandemic. This was according to Bill Johnson, Vice President of Data and Analytics of Equifax. Time will tell if we have learned our lesson. Good job, Canada. Stop using that plastic, unless it's a debit. But you get what I'm saying. Stop running on credit. The fumes of credit, we're running on fumes. There's no more gas in the tank. We cannot afford to keep doing this. So this is a good sign. We're moving in the right direction. And then as CMHC is tightening things, that your debt ratios need to be better. Maybe if we can keep this in tandem together, we can get ourselves back on our feet. High hopes, Bradley. High hopes. Massive cash injections from the federal government and the Bank of Canada, along with deferrals on mortgages and other loans, appear to be helping consumers stave off difficulties for now. Consumer insolvencies plunged to the lowest since 2007. We've heard about that. But household debt service ratios, a key measure of financial strain, declined. It got better. Sweet. Equifax said the biggest decrease in debt loads was in the youngest cohort. Good job, guys. You're doing great. Average balances on non-mortgage debt for those between 18 to 25 fell 1% to $8,500. Interesting fact. Those between 18 to 25 have a balance of $8,500 on average. Let's get it out of the other way. We're going to flip that over now, okay? Let's get you guys up to having $8,500 in your bank account, no debt. Good luck getting past the credit card companies doing that. It's crazy the amount of marketing and spending that they do. It's nutso. Okay. So here's the response, right? So now we look to the Bank of Canada. We've seen interest rates coming down, but we have not seen mortgages dropping at the same rate. And we've also just found ourselves with a new governor of the Bank of Canada, right? So it's a very interesting time for us to see, well, what is their play? What's next? Like, do we see rates coming down? Do we see them going back up? What's that timeline? Given a reopening economy, decent stats, bad GDP, but decent employment coming back, right? So Canada's new top central banker says the Bank of Canada has no intention to raise interest rates given the current economic circumstances created by COVID-19. Governor Tiff Macklem, I honestly thought that was a woman. I thought it was a woman. And then I see a picture, and unless this woman has a beard, like, I don't even think he had a beard. Anyways, it's a dude. Says the central bank is focused on delivering, don't assume, low interest rates for the foreseeable future to support an economic recovery. So the stance is very much the same as it was with the prior governor of the central bank. That should also help lower the debt service costs households and businesses face. Is why Justin Trudeau kind of snarls when you assume that our costs are going to go up because interest rates are at record lows. Particularly if they've taken out loans to bridge to better times. Rates would only go up once Canada is well in its economic recovery, which Macklem suggests is still a long way off. So interest rates, they're either not changing or they're going to come back down. They're going to keep going down. We'll see. But we're already sitting at 0.25. So the Bank of Canada is saying that that's as low as they can go. They've gone an unprecedented bond purchasing program to ease credit flows in financial markets. And he said this, someday we will get through this. The economy will be recovered and interest rates will start to move back to more normal levels. What in the world is a normal level? Like, do we have normal levels anymore? You know what a normal level is? Downwards. Like, if you don't believe me, go back and look at interest rates. Like, go look at the trend of interest rates. It's going down. It's going down. I'm yelling timber. The bank's July monetary policy report will likely again provide best and worst case scenarios. So they're done telling us like what they're forecasting. They've pretty much stopped forecasting and they're just saying this is the best case, this is the worst case, deal with it. And based on that, the results, they determine their monetary stimulus that's needed and how long. So he's pretty much saying this is what we're going to do, right? This is how they're going to respond. He also said, excuse me, that he will see growth in the third quarter of the year, given the growth of 290,000 jobs recorded in May. So jobs are doing pretty good. People are going back to work. And I mean, the sky is blue. You guys are seeing it too. I think we could see some good numbers in the third quarter, but I would stress, listen to this, that even the good case is still pretty bad. That comes straight from the lips of the Bank of Canada. So there you go. So that is an emotional roller coaster. This emotional roller coaster continues. I don't know if Wonderland is open. I would assume so. but we are on our own roller coaster. What do we need them for? So I'm going to do this, guys. I'm going to take the day. I'm going to get some work done, play some catch up. And in the meantime, if you guys just want to relax, just go outside, enjoy the nice weather, go watch some birds. Just don't let those pesky Blue Jays hang out long. Since they've prevented evictions, they have a tendency to not pay rent. Thank you for joining us once again on Toronto's #1 real estate podcast. We're #1 on iTunes, on Spotify, and on Google Podcasts. Thank you for everything you guys do, all the love, all the support, all the comments, whether you agree or disagree. It's cool. We're all friends, we're all family, and I appreciate you guys tuning in every day with us. I'll see you guys tomorrow morning with more. Take care and keep it real.